Do you think that the 4-year cycle will continue, albeit less pronounced? Do you think we're going to go to a super cycle?
So it has been at least moderately damaging to the perception of crypto.
What could be the next institutional catalyst that could take Bitcoin higher? Do you think any coins will flip ETH this year?
Anything can happen.
Your Bitcoin price prediction by the end of the year?
My expectations are more moderate than most, but
in this current environment, is Bitcoin risk on or risk off? Do you think we've topped out this cycle? Do you think that was it?
I'm very positive. That's one of the things I see being brought up on Twitter every now and then.
GM, and welcome to another interview here on More Coin Bureau. Now, we are today being joined by a returning guest, Mr. Vetle Lunde. He is the head of research at K33 Research, one of the best crypto research firms out there. And he also writes for a column within the K33, ahead of the curve. So it's great having him back. Vetle, welcome back.
Thank you. And I'm truly impressed by how you pronounce my name. Rare to see people outside of Norway say Vetle with such fluency.
I make a concerted effort to make sure I get names correct. And I know, Swedish and Norwegian names, I have a knack of pronouncing. So two quick things before we kick off, guys. Firstly, if you're not subscribed to K33 Research, well, you're missing out. So I will let you know that the Coin Bureau Club members get a 50% discount on K33 Research subscriptions. So why don't you double bag those? We'll leave a link to the Coin Bureau Club down below. And then you can, of course, sign up and get a discount code for K33 and then sign up there as well. It's well worth your while. And then, of course, before kicking off, guys, I will let you know that nothing in this interview is financial or investment advice. Please consult your financial advisor as well as a disclaimer in the description for further information. Now, with that spiel out of the way, Vetle, it's been one hell of a crazy week, indeed, crazy month and a crazy year to start so well. So firstly, let's start with, of course, the biggest news piece this week, and you've obviously talked about it in your most recent Ahead of the Curve column as well, and that's that crypto strategic reserve. So I'm going to leave an open question here more broadly. What are your thoughts?
Yeah, it's a bit difficult now with the timing, given that we will know for sure what they intend to communicate tomorrow. My thoughts on the reserve is that it's a very nice and cool move for the industry. And it's also interesting that the administration has a very broad perspective and wants to both encourage other cryptocurrencies, but also facilitate for their growth. But in the minds of proper strategic reserve, I think that Bitcoin is the one asset that makes sense to hold for the US government. And that's quite simply due to liquidity considerations. Bitcoin is by far the most liquid asset. It's also due to correlations between crypto assets. So they tend to be quite high. So by adding other cryptocurrencies, you add basically more higher beta, but also in less liquid pairs. And then also you have the decentralization component with Bitcoin's launch being very fair and the supply being distributed over time, whereas you have larger bag holders in some of the other currencies that's mentioned. So while it's completely rational and pragmatic to own the other tokens on your own end, I don't think they fit the bill to be included in a strategic reserve if we ever get one.
That's true indeed, if we ever get one. Do you have any sense in terms of why you think these coins were thrown in the mix? Because obviously he came out very strongly for a Bitcoin strategic reserve. And over the past, you say at least 2 months now, it seems that now we obviously getting a bit sidetracked with other coins potentially being added. Do you have any sense as to why that is?
I think Udi's take on Trump using this as a negotiation tactic is a relatively strong one. With the inclusion of other currencies, other cryptocurrencies, you get some leeway to both discuss this strategic reserve in Congress and then make compromises and then finalize on a setup that includes Bitcoin but not necessarily other assets. So you start off on a high note and then become a bit more conservative after discussions are made in Congress. And I think that's the primary motivation. But then it's also communicating to the crypto industry that Trump truly wants to bring crypto home and he wants to support US-built protocols. And by communicating that Solana, Cardano, and XRP could be included in the reserve, he sort of puts an emphasis on US-built protocols being something that he appreciates.
Okay, got it. Okay, so that's fair. So we'll obviously know more about that once it's disclosed from that meeting, the White House meeting, which should be coming. Well, depending on when this video comes out, should be happening ASAP and soon. But I'm curious then in terms of going back to what happened specifically over the weekend, and this feeds into what you mentioned in your column, especially as it relates to when he decided to tweet it or pronounce it on Truth Social on a Sunday evening. Low liquidity markets. There was lots of questions around what happened prior to that and all this. I'm curious as to what's your thoughts on the impact it had on the market? Was it sensible to tweet out or to announce that on a Sunday evening with low liquidity in the markets? And what did you see in the market structure that happened after that post?
Yeah, it was the timing was very odd. It was Sunday afternoons are the least liquid. You don't have CME futures trading, and the market is generally very liquidity is tight, and the incremental buyer or seller has a more material impact on price. So announcing this on a Sunday evening, while Eric Trump tweeted that this showed the prowess of cryptocurrencies trading 24/7. It's a bit questionable, given the overall liquidity profile of the market. And what we saw was that prices remained high up until the US market opened. On CME, when they opened in the evening of Sunday, you saw hardly any reaction at all from CME. Yields didn't move at all. So sentiment on CME was just as apathetic as it had been beforehand. And that reigned true until the US market opened, and then prices just quickly reversed back to where they were before the announcement, which is typically what you can expect when news are announced on during illiquid market hours. And then obviously in the last few days you have seen price discovery move the market higher again in anticipation of what's coming tomorrow. But the entire timing of the announcement is yet another weird. It's yet another weird timing, similar to when Trump launched his Memecoin just the weekend before his inauguration. So it nicely fits the past extreme Trump movements.
Yeah, exactly. We'll be getting onto the Memecoin launch in a bit. I'm just curious more. Okay, obviously now we're rolling into it, and hopefully by the time this interview's out, it'll be the meeting, the White House summit will be taking place. What are you expecting in terms of what we are to see from that? Do you think, first of all, is it going to be a sell the news event? What are you expecting to potentially see come out of that? Is it anything meaningful? And what do you think also about the dubious fact that it's being held on a Friday afternoon, which goes into illiquid weekend?
Yeah, I think similarly to Trump's inauguration, this summit might see overly excitement before it occurs, and that meaning that this might turn out to be a natural sell the news event similar to the inauguration, because per Trump's executive order on crypto published in January 23, he assigned the crypto working group 30-day period to look into current ongoing regulations within various US departments. And then he granted them a 60-day period to assess which of these regulations they wanted to keep. And then the crypto working group had 180 days to conclude on the regulatory framework onwards, and also to evaluate strategic reserve or a Bitcoin stockpile. So 180 days from January 23rd would be late July, and definitely not March 7, as is the crypto summit. So I expect maybe the market to be a bit disappointed by the natural time component within this entire process. So while promises and very strong and bullish fundamentally movements may be delivered during the summit, the market will probably have to digest that these efforts require time. And if they are implemented, it will likely happen later in this year. So you might see prices again start to drift and respond more heavily to all the other things that are evolving in broad financial markets, such as all the tariff variations we see from day to day. So, yeah.
Okay, well, that's a perfect segue, of course, into this volatility with other macro factors right now, specifically as it relates to this tariffs and trade wars. Now, I guess it also comes back to the question around like what sort of an asset is Bitcoin, risk on, risk off? What's its correlation to risk assets and all this kind of stuff? But I guess here's a simple question: in this current environment, is Bitcoin risk on or risk off?
Risk on up until now, but what you saw leading into the inauguration, between the election and inauguration, was that leverage was building in the system. You had very big ETF flows, huge demand for MicroStrategy, so they could dilute shares and buy more Bitcoin, and you just had a massive demand influx in Bitcoin throughout time. During the corrections in February, we have seen that more or less all of these indicators have softened. We have seen more or less a constant deleveraging of the market, either through liquidations offshore or just through traders on CME reducing exposure, and also ETF flows stagnating. So I think the initial reaction of being a risk-on asset it's definitely been a risk-on asset for the past few weeks, but the market participants who are treating Bitcoin as such have started to reduce exposure meaningfully. So we might see Bitcoin now either transition to a risk-off, but more plausibly enter a new stage of consolidation within a trading range that has hardly been tested. Like the 75k to 90k has just been an area of prices where we have been for a few days. So we might see a more stagnant market ahead. But I think the gravity of the risk-on sell-off is starting to moderate and soften.
Okay. So then taking a longer term view in terms of what this could potentially mean, let's assume that we enter a new world order with, lots of trade wars going off, trade barriers picking up, lots of inflation, especially from the perspective of countries that are being tariffed or facing the tariffs. I've seen theories out there that it leads to massive currency debasement of the other countries, right? Which therefore leads to inflation and, lack of purchasing power, and should be a driver for Bitcoin. So hypothetically, if we do lead to, a massive trade war and trade barriers going up in the longer term, let's say 2 to 3 years, do you think this is positive for Bitcoin or negative?
I do, but it's also a bit difficult with inflation because you, on the one hand, after COVID, you had basically helicopter money. You had people being sent dollars to compensate for the COVID shutdowns, whereas this inflation scenario is different. It's mostly a higher cost of living situation rather than the central bank stimulus and the fiscal stimulus from the governments. So it might damage people's ability to save for a period, which should reflect negatively on most asset classes. But the natural response down the line, given that the economy dampens and activity dampens, would be for yields to fall and then the cost of capital declining, which will then benefit Bitcoin and other the broad crypto market. So I think what we're seeing at the moment is very constructive for the long term for Bitcoin and crypto as a whole, but it's more murky and less straightforward than how I viewed the COVID situation.
Okay, got it. So moving on then, of course, you mentioned it in terms of the volatility of what we've been getting from Trump since he started his his second term, obviously, sorry. And since he started it and inauguration, one of the things that you just mentioned there in terms of things which was not expected was his Memecoin launch, right? And the mania around all the tweets that come with it and all that. I guess my question is, what are your thoughts on that? Obviously I think that generally the consensus was that, okay, maybe his Memecoin was good, at least initially. It's great adoption of Solana, people are using it. But then when the Melania went came out and all the rest, so I'm just curious in terms of just generally the meme coins that have been going on since Trump's election, inauguration, especially as it relates to his personal meme coins and those related to him. What are your thoughts on that?
Per conversations with journalists from traditional media and what we have read in newspapers, these meme coin launches has not been positive for the broad perception of the crypto industry. It's sort of helping crypto staying as a laughingstock rather than looking at the actual concrete innovation seen in crypto protocols, proven digital scarcity in Bitcoin and such. So it has been at least moderately damaging to the perception of crypto, but the perception of crypto was already quite bland, you could say, beforehand. So, but the implications also within the crypto market has been quite noteworthy. With you can see that the meme coin madness is just losing steam week over week with every new launch. Trump was obviously massive, but then following up with Melania, and then the entire situation with Javier Milei's meme coin endorsement, and with new celebrity coins, you can just see that there are fewer and fewer tokens being bounded on pump.fun, and like the momentum is losing steam. So while it was a short-term activity booster, it also has for now represented a final climax of the meme coin madness that has built over the past year.
Yeah, hopefully it's for the better, and we have no more meme coins, massive political grift meme coins. But I think obviously the meme coins did detract to a certain degree from a lot of the other positive stuff happening in the crypto space, specifically as it relates to regulation, legislation, and Trump appointees in the regulatory agencies, etc. So, I mean, in terms of the other stuff that is taking place right now, especially from regulation standpoint and pro-crypto slant from the administration in general, what are some of the things you're looking at that are the most consequential for the crypto space right now, be it from a regulatory perspective or legislative?
Yeah. So the theme that I'm most positive about has happened already, but it will need time to materialize. On the same day as the crypto executive order was published, SEC Secretary Hester Pierce rescinded SAB 121. That was a guideline from the SEC that basically made digital asset custody unfeasible for any traditional player, any tier 1 bank in the US, because crypto assets would have to be reported on the balance sheet and not off balance sheet treatment, which is common for other assets. So for, let's say, Boney Mellon or Citibank, that would mean that their balance sheets would be both become big, but also become super volatile. And there are regulatory requirements on these custodians that if the balance sheet is such and such volatile or this and this big, it limits like their leeway to enable new custodian agreements. So rescinding SAB 121 was a move that now allows these major custodians to enter the crypto market. And many of them are already sort of live with plans or already have soft custody solutions. But this further moves crypto into the realm of traditional finance and brings comfort and also pockets of capital access to the market that has for now been like moderately limited. But it has obviously expanded over the past few years. But having tier 1 banks entering the market is huge net positive. And then in terms of other regulatory frameworks, like the consensus behavior from SEC over the past few years of regulation by enforcement has just been a huge drag on the industry. I don't want to think about how many dollars Coinbase and Kraken and the other exchanges have been forced to spend on lawyers and their ongoing cases and litigations against the SEC due to a lack of a proper framework and also a lack of classification of currencies. But I'm very hopeful that these costs will now subside and that the general industry will have more clarity, which will make it easier for companies, exchanges, token initiatives to do business in the US, and also reduce like perceived regulatory risk investing in crypto for US institutional clients, but also like institutions worldwide.
Okay. So just going back to, obviously you mentioned SAB 121, right? And the potential this could unlock in terms of a key for institutional adoption. And I'm curious to know what else we should be looking at from the perspective of institutional adoption. For example, I mean, okay, SAB 121 will allow for, the repeal will allow for custodians on Wall Street, but what more are we likely to see in terms of institutional adoption? I mean, I know that potentially on the ETF front, there's still many wirehouses that have to onboard these. What could be the next institutional catalyst that could take Bitcoin higher?
Yeah, so it is. A lot of the fundamental bricks are now laid. We have the ETFs with ease of access, and as you mentioned, we need wirehouses to accept the products. But with tier 1 bank custodianship, we can also get new kind of market structures that's more similar to the ones we have in traditional finance. you have initiatives in both the US and UK of what's called central clearing houses. It's in crypto, like on Coinbase, trades are like netted between two individuals whenever a trade is done. Whereas in traditional markets and in a model that a few initiatives tries to emulate within the crypto market, the EDX and Clear token in the UK, you have centralized clearing, which is a more efficient approach to distribute risk, and it also like more closely resemble what institutions expect from common market infrastructure in traditional markets. So I think developing the market structure from like a fundamental perspective with custodians being tier 1 banks, clearing being in central structure, and then traders operating through that layered approach is something that can make more institutions more comfortable of buying spot crypto and generally improve the liquidity in the market and just facilitate further maturation of just the crypto market structure. So I think it's not like such an explosive scenario such as the launch of ETFs, but it is a big one and a fundamentally important development, and a development that I think will materialize more in the years to come.
Okay, got it. Just anecdotally, I mean, have you spoken with any institutional investors or clients that these central clearing and rails is important for them to want to allocate more, or is it just based on public information in terms of like what they've said in surveys and what?
It's based on survey responses. So regulation have been one huge major issue over time, but also market structure and just the trading ecosystem has also been a relevant factor. So ETFs, resolved some of this issue. ETFs had and still have some kind of issues related to how they are settled with cash settlement instead of in-kind settlement, which is also another move that we are likely to see being resolved shortly. But like the market structure is developing into structure more reminiscent of what you have in other asset classes, and surveys have indicated that has been an important factor for institutional investors.
Got it. Okay, so just moving on a little bit, curious to get your take on now what's going on with this cycle. So obviously there was a lot of bullishness when the year started off, when Trump was inaugurated, talk about a super cycle, nation state adoption. And obviously that's, now things have tapered out a bit and been in a range and all that. Some people questioning if the 4-year cycle is still intact. So I'm curious, just straight up, do you think that the 4-year cycle will continue, albeit, less pronounced in the future? Or do you think we're going to go to a super cycle with broad nation state accumulation?
Yeah, so we touched upon that in our year in review report, where basically our view is that we are nearing an end of the 4-year cycle. Not to be said that we are entering a super cycle, but we are entering we believe that we are entering a period where Bitcoin has become sufficiently big, the crypto market has become sufficiently big, so other liquidity considerations and global macro developments will be materially more important than the reduced issuance per block, which happens every halving. And obviously it's some reflexivity in the 4-year cycles that traders are well aware of the 4-year cycle being a thing. They position accordingly, and behavioral patterns recreate the behavioral patterns. So you might see some sense of repeat, but given how big the market has become and how Bitcoin is now an asset that people are talking seriously about being held by nation states, and you have all of these easy accessible regulated products from ETFs and ETPs, it's sort of moving away from the former market structure where you would get peak froth within a small pocket of a market with huge leverage and then collapsing leverage and then grim bear markets and then rinse and repeat. It's sort of evolving from that. So I think we will see a market behaving more ambiguously, but also generally on an uptrend, but without the same pronounced 4-year cycles as we have seen up until now.
Got it. And then we're speaking about the cycle now. So we hit 109K all-time high about a month or so ago. Do you think we've topped out this cycle? Do you think that was it? Or do you think there's more to go and the top of the cycle will be as is generally consistent with halvings and 18 months after halvings, like towards the end of the year.
Yeah, I think that trajectory is very plausible. On my end, what I did was selling some of my exposure on the inauguration, and I have used the correction last week and also to a certain degree this week to re-enter. I expect prices to, as I said earlier, to stay within this range for quite some time. But I'm positive with the prospects of a strategic Bitcoin reserve in the US. I acknowledge that it will take time, but on a timeline perspective, it makes more sense that this is something that's voted through in Congress either like in July, August, September, and is a huge bullish catalyst. And like those slow-moving processes now will emerge into actual processes in the future. So you will see more natural excitement for crypto and traders position for that. So I'm very positive, like if we zoom out a bit more. And I think the stars are relatively solidly aligned for a strong end to the year this year.
Yeah. So you sold out some of your position just after the inauguration, and you bought back recently.
Yeah, I had some like relatively strict rules for myself on how I should navigate this. It's impossible to like know which price level you want to sell on. The inauguration was just a prime event set out to be a good event, to a very typical sell the news event. Like we have seen so many sell the news events throughout crypto market history. All of these events have been fundamentally positive in the long term. Like the CME futures launched allowed institutional investors to buy and sell Bitcoin in a regulated manner. And Coinbase's IPO allowed the easy access to invest in like crypto infrastructure. And El Salvador's launch of Bitcoin as legal tender sort of was the early mover that set the stage for like what we are seeing in the US now and also in Bhutan and like other governments. Like it set the tone in that discussion, but like it creates these natural peaks where excitement just builds on excitement and you reach sort of a bubble scenario. So I wanted to just be pragmatic and sell on the inauguration day. And then I have been looking at the former all-time high, like $75,000 as a natural area to re-enter, but waiting for that level to be hit when you can also enter on 80K and 81K is, in my opinion, a fair thing to do as well. So I have now sought to re-enter. I have still some cash sidelined, but I think it's more plausible that we are like near the like bottom levels of where Bitcoin will trade within this year, and that this is the conclusion of the bull market. But so I want to hold exposure for the time being.
Well done, man. You timed the market better than 99% of people on crypto Twitter. So yeah, it makes sense. So just moving on to another thing you mentioned earlier, and this relates to your column last week, and that's obviously the volatility created around MicroStrategy buying, right? And in your column last week, you talked about the impact of the reducing premium, obviously the premium of market cap and enterprise value to net asset value. Obviously, the reduction in premium means therefore the less opportunity to equity finance Bitcoin purchases. So I have two questions to this. One of them is firstly, and this is something I've been thinking about for quite some time, I'm wondering how much of an impact in terms of the run-up we've seen over the past 2 to 3 months was as a result of Saylor's accumulation, right? Because, I mean, he's accumulated a lot. And then two is now that potentially we could go into a less premium stage, less equity issuance, less purchases by Saylor, what impact do you think that's going to have going forward?
So it's no doubt that Saylor's impact was huge. Like from the period where the 21 billion plan was announced and up until Christmas, they bought 200,000 Bitcoins, more or less equivalent to the net inflows to US Bitcoin ETFs at the time. So simplistically, you have this one entity buying as much as like everyone is buying through the ETFs in a bull market. So they were definitely a huge contributor. But then it's like while it's Saylor and MicroStrategy conducting these purchases, they are enabled to conduct these purchases because people are willing to buy their share. So it sort of resembles what you would see in an ETF flow, just a bit more inefficient, that people are willing to buy MicroStrategy at $500. So MicroStrategy is able to dilute more. Every investor knows what they are buying in MicroStrategy. So everyone who buys MicroStrategy expects them to buy Bitcoin with and to get indirect Bitcoin exposure through MicroStrategy. So it's like a combined market effort, but it's like Saylor hitting the buy button and must have been a very material factor driving prices higher in Q4 2024. And also, we have even seen like periodic evidence of this during Q1. In Saylor hasn't been buying that much, but every week where he announces a buy, you can see that his like volume weighted average entry is extremely high. Like you can see on the chart of Bitcoin that okay, he bought from Wednesday afternoon until Friday morning, because that's when the VWAP was this, and then the price of Bitcoin was then like $3,000-4,000 higher than it was on average for the rest of the week, and that's been a common theme for these announcements. So less ability to purchase Bitcoin ahead will like it implies a lower lower demand in the market to absorb Bitcoin, and you will not get the same kind of natural momentum that arises whenever MicroStrategy is involved in the order books. But then again,
Exactly.
the ability of MicroStrategy to spend is like fully dependent on the risk sentiment in the market and the trader demand to buy or sell MicroStrategy shares. They don't want to dilute away all premium they have on their Bitcoin holdings. So they are conservative now, but if you suddenly a new pocket of demand arises in MicroStrategy, let's say when they can report crypto returns in their Q1 report and they have a massive profit, then maybe you have new pockets of demand and like more dilutive efforts and more convertible note offerings and more momentum again. So it's a unique beast, but I don't think their Bitcoin purchases is over indefinitely, but they are probably over for like the near term.
Yeah, that's true. And in terms of, I mean, I've seen some numbers around potential prices at which MicroStrategy would have to start liquidating Bitcoin to be able to. Those are low. The prices are much lower than like what 30 to 40K in terms of potential, liquidation levels.
Yeah, that's one of the things that I see being brought up on Twitter every now and then, and it's in my book mostly like what CC would call FUD, because the convertible bonds, like the debt structure of MicroStrategy, is such that they wouldn't have to pay back their debts until like 2028, 2029, 2030, and it can roll over this debt. So it's no actual liquidation price on MicroStrategy at the time being. It's a liquidation time, like if 5 years down the line, if prices are sufficiently low, MicroStrategy is probably going to buckle under that pressure. But it's no imminent risk of MicroStrategy being a forced seller in the like near or even distant future. So while it's interesting to look at like their average entry price and like the debt to equity ratio, it's no major concern that crypto owners should worry about in the next few years or so.
Yeah, of course. And then of course, generally the convert buyers will more than likely want to do a restructuring. They need sort of liquidations and stuff. So it's not like a crypto liquidation on an exchange. It's a completely different kind of beast.
Yeah, and you even saw like in the 2022 bear market, MicroStrategy was like trading at a discount to their holdings, and like there were actual like people were afraid that they would be forced into selling, but you saw that the debt was rolled over and they endured that bear market, and they're probably going to endure another bear market. So it's less of a concern in my book than like what I perceive that is the view on Twitter at least.
Yeah, that's true. So just quickly now moving on down the risk curve in the crypto space. And I'm curious now because another really important question everyone is asking is about Altseason, long-suffering Altseason. And indeed, first of all, whether we would have one, if it comes at all, and how big could it be? So I'm keen to get your take.
Yeah, it's... I think the prospects of an Altseason are far greater now than 1 year ago. Like touching upon regulation in the US, you might see more like DeFi protocols being willing to implement some kind of token buyback structure that makes buying DeFi tokens more appealing because you can justify your investment through like DCF models and such, and like a regulatory approval to launch other token initiatives might make investors more comfortable in buying altcoins. And there's a lot of interesting developments within the altcoin sector. You have like tokenization is a huge team that like BlackRock and Franklin Templeton are already involved in, and it's a movement that's probably just going to expand with time. And that that does not happen on the Bitcoin blockchain. It happens on other protocols, and it nicely fits with like DeFi exchanges and like that part of the landscape. So that's positive momentum wise. And you also have like whereas 2024 was very, very Bitcoin centric, you had the Bitcoin ETF launch, flows into Bitcoin, and you had MicroStrategy being an aggressive Bitcoin buyer. So in that period, like liquidity went to Bitcoin. And then if liquidity went to altcoins, it was traders selling some Bitcoin to buy altcoins. So it happened like in a second step rather than in a like initial liquidity step. But the prospects for altcoin ETFs in the US now are looking very promising. So you might see like direct allocations to altcoins with ETFs in due time, and that might like spark a wave of market enthusiasm within like the altcoin market. And other developments such as like enabling staking in Ethereum ETFs may also make Ethereum ETFs more attractive to invest in as a investable product, because you can earn a yield, and that might reflect on like more demand for ETH, more demand for DeFi projects, and just more general liquidity hitting the market. So it's I'd say the altcoin sector is like in a far more promising footing now than what it was with very Bitcoin specific catalysts throughout 2024.
Okay. Do you think that staking ETFs will really have that much will lead to that much demand for these products? I mean, because I think they already do have products like this in other countries, and they haven't necessarily seen a disproportionate demand compared to the non-staking components, non-staking equivalents.
As more like a narrative rather than as an actual important change, because it's only a few percentage points of excess returns every year. But like the Ethereum ETF launch couldn't happen at the worst time. If you look back, it happened just directly after Mt. Gox's distributions. The market was quite desperate at the time, and willingness to invest in crypto was already at lows. It was during the summer lull, like the activity was already very low. And then you had the same exact problem as Bitcoin ETFs had, with the vast size of Grayscale just being lifted into the market as traders could finally exit these close-ended positions. But now if you like, and people were also like reluctantly, like somewhat negative towards the ETF launch because it didn't introduce or allow staking. Whereas now you have a market in a relatively depressed scenario still, but you have like the perception of US regulation due to improve, which is likely going to happen. And you also can get that win of making a more appealing, efficient ETF structure in ETH. So you have like this narrative tailwinds that might spark new enthusiasm back into the market. And whereas like staking ETPs in Europe has been, since they launched, have been more popular than the non-staking options. So you'll probably see some rotation into these staking products, or just the entire structure changing. But they didn't have any material direct impact on flows at the time. But Europe and Canada are just substantially smaller exchange-traded product markets than the US. So it's fundamentally more important what happens in the US in terms of product launches, product developments, and accessibility.
So keeping the conversation on Ethereum now, then I'm curious about what you think about its prospects, both because it's obviously been one of the long-suffering cryptos of the cycle, right? I believe that its price is now somewhere near where it was in 2021 in a fiat terms, and obviously completely collapsed against Bitcoin. So what's your outlook for ETH in terms of both from the perspective of in fiat terms, right? So its price, and then also in relation to its pair versus Bitcoin.
Yeah, I think like comparing ETH, like ETH is better suited to be compared to Solana and like other layer ones. Like ETH as an early mover, and also like due to all the like architectural layers that has been built on top of ETH, suffers like relatively substantial problems with participants on the ETH network using layer 2s to avoid fees. Like you don't have the same fees being burnt as you did in the past. Transactions, like the entire infrastructure is somewhat complicated. You have to bridge across layers, and liquidity doesn't flow as fluently as it does on the Solana protocol. And then you also like the comparison with Bitcoin and like ETH trying to be sound money and also vast decentralized network has sort of placed Ethereum like between a rock and a hard place where it doesn't really fit any of the bills. Like the market does not accept Ethereum as like similarly sounds scarce asset as Bitcoin. It's generally not accepted by the market just per the price action over the past few years. And other layer one protocols are like taking the lion's share of volumes and activity. So Ethereum have some huge architectural issues onwards, and I would say it's far more likely that Solana flips Ethereum in the near to medium term than that Ethereum resurfaces and flips Bitcoin.
Interesting. Okay. So you think Solana will flip Ethereum in terms of market cap?
Yeah, I think it's going to happen. Like Ethereum has been flipped by other tokens in periods, but now these tokens haven't had like any material on-chain usage. It's been like you had Bitcoin Cash during the entire chicanery that happened in 2017, and you have briefly had XRP above Ethereum, but Solana has a fundamentally active user base engaging frequently on the protocol, either via meme coins, but also on very efficient, cool, decentralized perp exchanges. And like the Solana environment is very vibrant, and it has endured probably the worst kind of news flow that any asset in the crypto landscape could endure, with its affiliation to FTX and just collapsing to $8 in 2022, but still recovering and still thriving. So I think Solana has showcased a sense of longevity and also actual adoption and usage that suggests that Solana is primed for continued outperformance vis-a-vis Ethereum.
And so you think that this current, fight around the meme coins and the meme coin ecosystem, you've generally seen, Solana is just a casino chain for meme coin degens. You think is that an unfair characterization? Or if it is unfair, do you think that it's going to evolve to a more useful, utility-based chain?
It's a justified thing to say about Solana, but it's also something that would be like justified to say about the industry as a whole. Like during bull markets, exchanges have offered all kinds of bad tokens that you could invest in. You had the entire IPO period ICO period in 2017, and like it's been many charlatans and also many like nihilistic investment periods in the crypto markets in the past. And Solana enables like tokens to be launched extremely rapidly and then to be traded through order book based protocols on the blockchain, which is like where the magic happens. But the meme coin launches themselves are like they are bad poker chips to sit with on the casino, but the infrastructure behind it is quite impressive and unique. So while it now has this meme coin mania, and that has been the ongoing theme, you also have like launched cool dexes and very unique infrastructure, and also an entire blockchain that's or an entire activity that happens at the blockchain level rather than through a complicated subset of layer twos and liquidity fragmentation. So I think the design of Solana is you can definitely criticize Solana both for activity that has happened there with meme coins, but also like how decentralized it even is, like with relatively few nodes. But it runs very efficiently, and it's a very solid crypto project.
Got it. In terms of any other altcoin or layer ones or altcoins, you think that you could benefit specifically from this pro crypto regulatory landscape? Are there any others that you think could be interesting, or they could potentially also challenge Ethereum and Solana, highly performant L1s, etc.?
Yeah, so you have on one perspective that's not the like side of the market I would be most interested in, but like you have the like pragmatically made in US token landscape. You might say like corporate tax benefits of holding, like reduced taxes of holding these tokens, or other initiatives to like secure US innovation within the crypto landscape. So you could see like some momentum arise from that. But what I'm mainly excited about from a regulatory point of view would be like DeFi protocols and other on-chain protocols being enabled to do some kind of token buybacks, which makes the revenues of the protocol benefit holders of the token. So that's a big development that I hope to see, and something that excites me.
Okay, got it. So just a quick one, something quick coming back to what you do now as a researcher, and obviously what we like to do here at Coin Bureau is learn from the best, and obviously we do a lot of crypto research ourselves. So I'm just curious to get your perspective in terms of what your research flow looks like. So how do you conduct your research and specifically draft up these reports? What tools do you use? And how do you structure your day in order to be on top of all this rapid fire of information?
Yeah, that's a good question, particularly now in the last few weeks. You can see that I'm a bit red on my eyes. I'm slightly sleep deprived, and it's been a rough period.
It's the crypto look, bro. It's the crypto look. We wear it well.
Yeah, but I do spend a lot of time on news websites and also Twitter, like checking out the block frequently, CoinDesk, and all of those other relevant news agencies. And then I have lists on Twitter, notifications on the most important people at that time whenever they tweet. And obviously, a lion's share of what I do is looking at data and collecting data. I do have some TradingView interfaces to give me a quick overview of yields in the market, that being funding rates and CME premiums. I very frequently use Levitas to have an overview of the leverage in the market in notional size. So how many Bitcoins are leveraged in the market, not how many USD, not USD value of it. And I use that to gauge and get an outlook on the relative degree of leverage in the market and combine that with yields to assess sentiment. And then I look at volumes and ETF flows, and also pay attention to good macro voices to sort of interpret the ongoing now situation with tariffs, but also monetary policies, Fed onwards, and it's many different sources, and it's a bit hard to explain in a structured manner how I use them, but it's been my job now for 5 years, looking at these charts and these data sets every day. So I sort of have an intuition on how to interpret them, and then I just keep on absorbing new information, sources such as Twitter.
Got it. So you don't watch any informative crypto YouTube shows?
It happens as well, but
I'm joking. I'm pretty sure that most crypto YouTube, apart from us, of course, most crypto YouTube, it's very sensational.
Yeah, but I like to watch your content, and I also like to listen to podcasts. But it depends on my day. So having been working in the deeps of crypto data for an entire day, then maybe I want to, when I get back home, think about other stuff. Even though it's challenging, especially given the current volatility. But yeah.
What are some of just because I also listen to quite a few podcasts, what are some of your most favorite podcasts you listen to, your go-to list?
I think Blockworks has several good podcasts. I have no clue how to pronounce his name, but Feyao on
Feyao.
Yeah.
Ford Guidance guy,
yeah. I would say the one I listen to the most. And then it varies. It depends on guests on podcasts and themes of podcasts. But Forward Guidance would be my go-to. But yeah.
Yes, the Blockworks table has got a lot of cool podcasts there. So Vetle, just to quickly finish off with, basically I like to at the end of these usually run through a few rapid fire questions and predictions, because obviously this is crypto YouTube. So I'm going to go through a few questions, and then I think just give me a short answer in terms of your what you think the answer should be, and then a short explanation. We'll go through a few of these just to finish off with. So I guess my first question obviously is the big one, and that's your Bitcoin price prediction by the end of the year.
$140,000. It's It's I recognize that me talking about the bull market that brings on expectations of high price targets, but we also have to acknowledge the market cap of Bitcoin. It's very big. It takes more to move the price more. So my expectations are more moderate than most, but 140K.
Okay, cool. And then which is the next altcoin to get an ETF?
Solana.
Okay, interesting. And would you, obviously you've already said that you think Sol's going to flip ETH potentially. Do you think that will happen this year? that Sol could flip ETH? Or do you think any coins will flip ETH this year? Put it that
No,
way.
I don't. I think it will need more time to materialize. But if we get a crazy altcoin cycle, anything can happen.
Yeah, true. So is there any of the biggest potential upsets this year that we could see?
I'm more afraid, for crypto or more generally?
Yeah, more generally, or for crypto, basically something that you think has been the biggest risk that is being underpriced at the moment. That could come from crypto side, could come from macro side, something that potentially could throw all our models off.
Yeah, it's like geopolitics would be the big one. It's vague, but like the fragmented, the way the market is moving towards a more fragmented nature is somewhat frightening. You have tariffs, obviously, but also the entire discussions about Ukraine, Russia negotiations, and then like Europe's relationship to the US, and so the biggest upset, both from a market perspective but also from a human perspective, would be like escalations in global tensions, and that's a concern I have for the year and for the time being. But I don't think it's very plausible, but it's definitely a factor that may break risk models.
Fair point. And then finally, do you think that Trump will add the Trump Memecoin to the crypto strategic reserve?
No, but I could see him trying. But I think that would make the entire strategic reserve. It would reflect what he ended his closing remark on in Bitcoin 2024. I think we shouldn't forget that he told the audience to have fun with their crypto and their Bitcoin and everything else they are playing with. So it would be to the tune of that. But I think if he does that, he basically communicates that to him this reserve is some kind of
joke.
Weird joke. So I don't see it happening.
I mean, let's hope so. Please. Well, thanks a lot, Vetle. This has been a really great discussion. And no doubt our viewers have a lot of insight. And like I said, guys, I'll leave links to K33 down below, as well as your Twitter. Vetle will leave it down below as well. And hopefully we'll have you on next time soon. And I'm looking forward to seeing exactly what comes out of that White House meeting.
Yeah, super excited, but my expectations are somewhat dampened as well.
Yeah, no, true. Well, it's only up from here. Well, we always say that.
Yeah.
Cool. Well, thank you very much, Vetle. We'll be in touch soon.
Yeah,
Cheers,
thank
guys.
you.